Brandon Johnson back in studio with us. Brandon, good to see you, sir.
Hello, Bob.
And I see you have brought one of my favorite things. A
Yes.
letter from one of your clients. Ready?
I am.
We purchased our home 2 years ago with a 5-year adjustable rate mortgage, the ARM, right, a 5-1?
Correct.
At 5.75%. Our thoughts were that rates would drop within the next 1 to 2 years, but that has not occurred, Brandon. What advice do you have regarding refinancing in the next 2 to 3 years? First of all, full stop, you are not a lender.
Correct.
Okay, but you work with lenders all the time.
Yep.
You probably have conversations over dinner with lenders all the time.
Yes.
Brandon, what do you suggest?
Well, again, there's a lot to unpack. Everything's going to be specific to your situation, but this is a very common occurrence. Just to rewind a little bit. Coming up on two and a half years ago when rates dramatically went up about almost doubled in 60
For sure.
days, right? So that's a shock to the system. And so to put it in simple terms, a $350,000 mortgage going up just 1 point is almost $300 a month.
Right.
And so it's significant. So when you talk about going from 3.5 to 7, and there was a spell where we were in the 8s range,
Right.
That was a huge shock to the system. So what a lot of people did is do an adjustable rate mortgage, which gets a significantly lower rate. You can get a rate in the 5s that was locked for 5 years, 7 years, 3 years, whatever you chose. And then after that deadline, in this case 5 years, it's adjustable to whatever the market rate is, and it's usually capped that can't go up more than 1 point per year and that sort of thing.
Sure.
So a lot of people, and rightfully so, made that decision that they're going to save significant money with the thoughts that we'll refinance within the next 5 years.
Right.
Now, rates have come down a little bit. We're roughly in the upper 6s right now, correct?
Right.
So we're not in that upper 7s, 8% that we were over a year and a half ago.
But we're not down to 5 or 5.5, are we?
Correct. And so that's really where the dilemma is, because it's predicting the future. What do you feel comfortable with? To get back to the root question, it doesn't matter whether it's an ARM or anything.
Yeah.
The first question you need to ask yourself is, how long do I see myself staying in this home?
Right.
That's the biggest question in refinancing, whether you're in an ARM or anything. And so if you're planning on staying, and I know the future can changes and life changes happen, so you never know what you may end up doing.
Mm-hmm.
But if you foresee yourself being in this home, let's say for sure another 5, 6, 7 years,
Yeah.
what I would tell people in this situation is rates are just under 7 now. They do fluctuate. They are going to fluctuate in the next 2 years a fair amount.
Sure.
Are they going to go down to 4 or 5? Likely not.
Right.
But will they go down to 6? I think that's highly likely. So what I would set up, whoever my loan officer is, if I have an adjustable rate mortgage that's going to be adjusted or reset in 2 to 3 years, I would be telling them, hey, watch this. Call me if rates ever get 6 1/4, 6 1/8,
Right.
and refinance then. That would be my recommendation, my advisement. Now that's a little bit higher than where they're at 5 3/4.
Okay.
But if you can lock in a 30-year mortgage rate in the low 6s or 6, I think that's something to take advantage of.
Okay, I just want to jump in here and one more time say you are not a lender.
Yes.
Okay, that's very, very important.
Yep.
All right, as you're having...
Can I take a step back,
Absolutely.
Bob? You're still coming out way ahead on your overall strategy of doing the ARM, because the alternative when you bought
Right.
was 7 3/4, 7.5. So you're still coming out ahead. But putting myself in their shoes, the thought process is the hope was rates are going to come back down to 4%.
Yeah.
And that's likely not realistic.
Okay, we have
Anytime
talked about
soon.
the fact that 7%, historically speaking, has been where we've at if you average it out over the last 30 years. And you know what? If you look at mortgages, 30 years, that was the plan back then. Days gone by, you would buy this house, you would stay there, right, and raise your family.
Yep.
And then when it comes time to retire, that's when you sell your house. But attitudes have changed, and maybe we need to start thinking about attitudes changing again.
Yeah, and again, it depends on where you are in your life cycle. If you're younger and you're moving, if
Sure.
you're getting married, all sorts of, those are things to factor in. What I would also like to mention, to keep in mind, that most adjustable rate mortgages now are capped at increments of 1% per year. So if you're at 5 3/4 and it increases, it's the first year is going to go to 6 3/4. So you really have a little more time than you may think you have, because even if it increases the first year or two, you're still back to
below
par.
rate, yeah.
You're still back to par. So I know that feeling of urgency is setting in, but it may not be as dire. It's not like it's going to go from 5 3/4 to 8.5 in the first year.
Overnight,
it is capped. So you have some protection there. But what I would tell people again is be in touch with your lender and say, in the next year, if they drop to 6 1/8, let's lock in there. And then if they do go to 5.5%, you can and you can always refinance another 5-year arm as well too.
What I was going to ask also is that can I buy my mortgage down? Can I buy my rate down? That requires some money, but again, if you're looking at a long-term thing,
that's another great option.
20 years, 30 years, you're still going to be ahead.
Yep, that's another great option. So the biggest advice I can give, and this question, these people are thinking about it, is have a plan, have a strategy.
Right.
Buying down your rate and locking in a fixed rate mortgage is a great strategy. Where you don't want to be is getting that letter, the rate's going up and you had no idea about it. You have no plan. And so having a plan, I think it can become very manageable.
Relationships with your lender, very important. Relationships with your mortgage guy, relationships with your realtor. Brandon Johnson, how do we work with you?
Yeah, you can give us a call at 320-774-2400 or online at VoigtJohnson.com.
Brandon, thank you.
Thanks, Bob.